Kia ora, everybody. Ko Misha tōku ingoa. I am the Director of Assurance at the XRB. Reminder that this webinar is being recorded, and today's slides, together with this recording, will be made available on the XRB website following the session. If you do have any questions, please do feel free to pop them in the chat. We'll do our best to answer them as we go along, but we do have a busy agenda, so if we run out of time, we'll get back to those questions in another way following the webinar. Today I'm joined by the assurance team, and we are going to be covering the why, the what, and the when of all latest updates to auditing and assurance standards. The way the agenda has been pulled together is that we'll first cover the standards that are coming soon. Then we'll move through recent approvals, of which there are 3, and we'll end with standards which we are currently seeking feedback on. Without further ado, let's get into the standards that are coming soon. This really revolves around preparing to implement revisions if you do group audits. So if you are the group auditor, or if you are the component auditor that is working on a branch or a subsidiary, and that information gets reported into a group audit, then you need to be aware that the standard has been changed and that now is the time to get ready. On this slide, really what I've done is just a reminder that the standard has changed, and when you get these slides, you'll be able to click on these images and it will take you through to where the relevant documents are on our website. We covered the details of the revisions in our Need to Know series at this time last year. So I've also included a little image there, and if you click on that link, it will take you through to that recording where you can find more information about the key changes. But what we've also developed is a staff frequently asked questions guide. Now that's a nice, easy 2-page read that covers the why the standard has changed, as well as some of the practical implications. The key thing to note is that these revisions are applicable for accounting periods beginning on or after December 2023. So really, now is the time to get ready. On the next slide, I will very briefly cover why this standard has been changed and what are the key aspects to bear in mind. So firstly, there is a focus on proactive quality management. So for those of you who are busy implementing the revised quality management standards, there is a flow-on effect that has been replicated in the auditing standard covering group audits. Another key aspect is that the revisions make sure that the standard remains fit for purpose in a wide range of circumstances and in a developing and changing environment. So some of the key aspects that have been revised include clarification on the scope. So that is including whether you might be using increased use of shared service centres, you might be involved with non-controlled entities, and you might be doing work with branches or divisions. The changes also clarify how to address restrictions on access to people and information. Now, this is really relevant if you're working in international group circumstances, where you're working with jurisdictions where there are restrictions on access to people or information. The third element that's key to note is that there is a focus and a need for robust communication between the group auditor and the component auditor. And finally, there's a focus on that professional skepticism, increasing that challenging and skeptical mindset. So this has been a whirlwind tour, really just to remind you that the standard on group audits has changed, and I've given you some links to where you can go find some more information. The point of today is to remind you that now is the time to get ready. On the next slide, what we haven't previously covered is related changes to the ethical standards. So what's changed here? Well, the Code of Ethics has been amended to revise the definitions and also to add a new section specific to independence considerations in a group context. So let's walk those through. Firstly, what's the relevance of amendments to definitions? The key thing is that the definition of an engagement team and the definition of an audit team have both been revised, and this is really to recognise those evolving team structures. These changes are very consistent with changes to definitions in the quality management standards. And the key concept to bear in mind here is basically if an individual is performing procedures on the engagement, regardless of where they are located and what is their employment status, they are part of the team. And there's some additional guidance in the standard to help you understand exactly who's in and who's out of those definitions. But why do you need to know who's in the engagement team or the audit team? Well, really, it's about ensuring that you can then apply the relevant independence considerations. So there's also some changes in additional definitions focusing on the group audit team, the group audit client, the component auditor firm, and then the component auditor client. But the key thing to bear in mind here is that there is now a whole new section in the Code of Ethics specific to group audits. What does that section cover? Well, it again elevates that need for robust communication between the component auditor and the group auditor in this context on independence matters. It also importantly covers the process if there is a breach of independence provision at a component auditor firm. But the key thing to take away from today's presentation is that these relevant independence considerations apply to individuals, to the group audit firm, and then to the component auditor. And importantly, there's a distinction between if the component auditor is part of the network firm versus if the component auditor is outside of the network firm. So hopefully that's given you an overview of some of the key and important changes. Bear in mind that this standard is also applicable for accounting periods beginning on or after December 2023. So the package of changes that apply to group audits all come into effect together. These standards have all been compiled now, so you can go and find them and start to prepare to implement these changes. So that's the section on the changes that are coming soon. Next, we're going to move into recent approvals. And at this point, I'm going to hand over to Bruce, who will deal with further changes to the Code of Ethics. Thanks, Bruce.
Excellent. Thanks, Misha. So we've recently issued this amending standard on the technology-related revisions to the Code of Ethics, or PES1. It's important to note that when we mention technology in the context of the standard, we mean it in the broadest sense, encompassing all current and future technology solutions, even those not yet known. So what do these amendments do? Well, firstly, they strengthen the code in guiding the mindset and behaviour of assurance practitioners when they use technology. Secondly, they provide guidance fit for the digital age in relation to the fundamental principles of confidentiality and professional competence and due care, as well as in dealing with circumstances of complexity. And thirdly, the amendments strengthen and clarify the independence requirements by addressing circumstances in which firms or network firms may or may not provide a technology-related non-assurance service to an audit or assurance client. These amendments to the Code of Ethics will be applicable for accounting periods beginning on or after 15 December 2024. So what are the key changes? Well, first up, professional competence and due care. The Code now highlights the importance of non-technical professional skills, such as interpersonal, communication, and organisational skills. This is in addition to the knowledge and skills that are specific to the assurance practitioner's professional activity. In addition to making clients aware of the limitations inherent in the assurance practitioner's professional activities, the Code now requires assurance practitioners to explain the implications of the limitations of their activities to clients. We have a new definition of confidential information, which was previously not defined. And with this new definition and the new application material, practitioners are now more aware of their responsibilities to protect the confidentiality of information throughout its life cycle. We've also added application material with examples of when a practitioner might seek authorization to use or disclose confidential information. For example, when there's a legal or professional duty or right to do so. The circumstances in which assurance practitioners carry out professional activities varies considerably in their range and complexity. This is now highlighted in the application material, which also provides guidance on managing complexity. The application material for organisational culture has also been strengthened, with assurance practitioners now expected to exhibit ethical behaviour in dealings with individuals and entities with which they or their firm have a professional or business relationship. This is in addition to the current requirement of assurance practitioners being expected to encourage and promote an ethics-based culture in the organisation, taking into account their position and seniority. When assurance practitioners or auditors intend to use the output of technology in the context of preparing and presenting information or in the context of undertaking a professional activity, the code now requires them to determine whether the use of the output of technology is appropriate for its intended purpose. The application material now provides factors to consider when an assurance practitioner intends to use the output of technology, such as those factors shown on screen. And of course, with the increasing use of technology, it's really crucial to identify, evaluate, and address the threats associated with its use. The revised code now provides application material with examples of facts and circumstances that might create threats for practitioners when undertaking technology-related assurance activities. The practitioner should consider these threats, such as those shown on screen, when undertaking a professional activity. Next up, providing non-assurance services or NAS to assurance or audit clients might create threats to compliance with the fundamental principles of the Code of Ethics and to independence. An example of a NAS might be a tax consultation or valuation services. And before a firm or network firm accepts an engagement to provide a NAS, they are required to identify, evaluate, and address any threat to independence that might be created by providing that service. The requirements in application material that address the provision of a NAS to audit clients now also apply when a firm or network firm uses technology to provide that non-assurance service to an audit client, or where they provide, sell, resell, or license technology that results in the provision of a NAS by the firm or a network firm to an audit client. And finally, the standard currently prohibits audit firms from assuming management responsibilities for an audit client. This amending standard now provides examples of IT system services that result in the assumption of a management responsibility, such as those shown on screen. It's important to note that the collection, receipt, transmission, and retention of data provided by an audit client in the course of an audit does not result in the assumption of a management responsibility. So those are some of the key changes to PES1 or the Code of Ethics arising from the technology-related revisions. And the QR code on screen will take you to that amending standard, and a reminder that the standard will be applicable for accounting periods beginning on or after 15 December 2024. Now I'll pass back to Misha.
Great, thanks, Bruce. So unfortunately, Lisa, who is normally the face of service performance information, is unwell today. So I'm going to take you through the revisions to the audit of service performance information. But before I get into the revisions to the audit standard, I thought I might pause and just check that you all know exactly what I mean by service performance information. So if you're working in the public sector or in the not-for-profit sector, then you're probably more familiar with this term, because in New Zealand, public benefit entities are often required to report this information in their general purpose financial reports. But for those of you who are not working in that space, let's just quickly give you a reminder as to what exactly is service performance information. It is information about what an entity has done, working towards their broader aims and objectives. So it includes more narrative information often, about why an entity exists, what it aims to achieve, and then how it goes about doing that. The reporting includes an appropriate mixture of performance measures and descriptions to explain what's done in the current year. The information may include things about outcomes or impacts. So for those of you in the audience who are interested more on impact-focused reporting and or how to assure this kind of reporting, then this standard might be of interest to you. For those of you who are more familiar with the auditing standard that we have issued historically, your question will be more related to, well, what's changed? Why have you revised this standard? So that's what I'm going to focus on in the next couple of slides. We recently issued the revised standard, so links to the revised standard, as well as links to the basis for conclusions document, can be accessed through clicking through this slide. You might ask me, well, what is a basis for conclusions? Great question. It's really a document which sets out the board's rationale in responding to some of the feedback that we heard on consultation when we proposed to revise this standard. Key thing to note is that the revised standard commences to apply for periods beginning on or after 1 January 2024. And it is at that time that the revised standard will supersede the existing standard. So let's quickly talk about what to do on transition. There's a couple of things that I want to cover off on this slide. Number one, if you are doing audits in the public sector, you will need to follow the Auditor General's auditing standards. Now, the good news is that the Auditor General has confirmed that the revised auditing standard will form the basis of the standard for the public sector, but I would encourage you to keep close connection with the Auditor General standards if you are working in the public sector. If you are auditing information in the not-for-profit sector, then you are probably in one of three categories at the moment. Number one, you've either not done this yet. Number two, you might be doing the audit under what we call ISA ENZ 3000, just going to call it 3000 for short, or you might have voluntarily adopted the old standard, the existing standard NZAS1. Now, the key thing is that we understand that there's a range of activity currently happening, and we want to create an environment which is a little bit more flexible to avoid unnecessary change and change again. So I'm going to quickly outline, depending on where you're coming from, what you need to do next. If you're currently using the 3000 standard, you are able to continue to do so. You don't need to move to the existing NZAS1 and then transition again to NZAS1 revised. You can just keep using 3000 until you decide to adopt the revised version of NZAS1. If you have voluntarily adopted the existing version NZAS1, you can continue to do so, but you must transition to the revised version again for those periods commencing 1 January 2024. So hopefully that clarifies what you need to do and by when. The other question that we're getting is, can we voluntarily early adopt the revised standard? So the answer to that question is yes, but. So the revised standard was gazetted in July and takes legal effect in August. So if you are auditing a set of financial information that includes service performance information, and that accounting period already closed or ended before August, so before the standard takes legal effect, then you are not able to apply NZAS1 revised yet. But for any accounting period that was open when the revised standard takes legal effect, you are able to voluntarily adopt the revised standard. You don't have to. You only have to apply it for periods beginning 1 January 2024. I know that's a little bit different and a little bit unusual, so we have included a frequently asked question on our website, and hopefully that helps to clarify what you have to do next. Okay, so now you know what you have to do and by when. Let's talk a little bit about why we've changed the standard and the benefits that we see in the revised version. It goes back, I guess, to the first question is, why did we revise the standard in the first place? So we heard concerns from the Office of the Auditor General that the existing version of NZAS1 was not fit for purpose for the public sector. So what we did is we convened a working group and worked with practitioners across a range of sectors to make sure that we have a standard that is fit for purpose across both sectors. And as I mentioned, the good news and the key benefit that we see in revising and issuing the standard is that we have confirmation from the Office of the Auditor General that the revised standard will form the basis of the public sector auditing standard. So that, we believe, is a key benefit, because once you familiarise yourself with NZAS1 revised, it will be the same basis regardless of what sector you're working in. Some of the other key benefits from this revised standard is that we've adopted or aligned the language more closely with the requirements of language in the financial reporting requirements. So the key change here is that the old standard used to talk about suitable service performance criteria. What we've moved to is aligning with the language in the reporting standards, and that links directly to and refers to appropriate and meaningful information. What the revised standard does is it sets out sort of 3 layers to help the auditor evaluate whether what is being reported is appropriate and meaningful. And those 3 layers include the elements. So what elements of performance is the entity choosing to report about? And then the auditor has to think about, well, is that the appropriate elements to report on? Then you have to think about the performance measures and or descriptions that are used and think, well, are those the appropriate and meaningful performance measures? And then the 3rd layer is you have to think about the basis of measurement, or how that measure has been measured. During this process, we also work very closely with the accounting team at the XRB. So the other box on this slide is a link to recent accounting guidance that has just been issued, which clarifies and explains how an entity should also go about disclosing how it measures or evaluates its service performance information. So those are really the key benefits and the why we've made these changes. If we look at the next slide, the key message I want to re-emphasize is that the core elements of how you go about auditing service performance information have not changed from the existing standard. The nature of this work is such that the audit of the financial statements and the audit of service performance information are undertaken concurrently. So it's not a separate engagement. The work on the one informs the other, and they are naturally interconnected. So the principle of the standard is that the auditor is required to apply the full auditing suite to the service performance information, and NZAS1 sits on top of that, pulling out specific requirements given the nature of the information, which is significantly different from the financial statement information. Like I said, it's more narrative, and there's such a range and variation in how an entity will go about telling its performance story. So that gets into the second key point that I wanted to re-emphasize today, is that the revised standard still has this focus on a 2-step process. The step 1 is what's different and is probably the more challenging part of auditing service performance information. It requires you as an auditor to stop, think, really get a good understanding of your client so that you can understand why it exists, what is it doing towards achieving those objectives, and then you're able to take a stand back and go, does what the entity is selecting to choose to report about provide an appropriate and meaningful story about its service performance? You need to do that work before you start gathering your audit evidence against those specific measures that are reported against. So hopefully that gives you a little bit more information about what's involved in the audit of service performance information. We appreciate that this is going to be a transition period, and we are committed to helping you to transition from wherever you are to where you need to go. So we are currently busy developing an interactive flowchart to help you work from the old standard to the new standard. So watch the space, that will be coming soon. We are also developing some frequently asked questions. So if you've got any of those, send them through and we'll think about whether we can provide some guidance to assist you. But most importantly today, what I wanted to highlight is that we do have a deep dive webinar session planned for the middle of September. So if you are auditing service performance information, I encourage you to sign up to that webinar with links on our website on the events page. So that's what I wanted to talk about in terms of one of the new standards that we've just issued. You can see Anna standing by. So I'm going to now hand over to Anna, who's going to talk about the next one we've issued related to greenhouse gas emission disclosures. Thanks, Anna.
Thank you, Misha. It is my great pleasure to introduce you our youngest member in our assurance family. It's only 12 days old. It's our GAG assurance standard. You might probably recollect that we were talking a lot about the proposed standard last year, and we presented some of the main features of the standard to you back in March during the Need to Know series. Now we are coming back with the standard in its final shape, assurance engagements over greenhouse gas emissions disclosures. And as it is in the standard word, together with the standard, we issued basis for conclusions. This document includes our key decisions after we carefully considered all the feedback that we received from you during the consultation phase. But for those of you who are not very familiar with the context, I will explain why we have developed this standard. So in 2021, the Parliament passed the bill that required certain entities called climate reporting entities to prepare climate statements. The first reporting period for the climate statements has already started, and it is from January 2023. The climate statements will include various disclosures, and one of those disclosures will be information about greenhouse gas emissions. Those greenhouse gas emissions disclosures will need to be assured in accordance with the XRB standards from October 2024. And here where our standard comes into place. So what is included in our new standard? The structure has not changed since our exposure draft. So the first pillar is engagement requirements. Our standard required to follow one of two internationally recognized standards. It also includes some additional requirements necessary for the purpose of the standard. And we have added also some more details following the feedback that we had from you. The other two areas are ethics and independence and quality management. The international standards are embedded in various ethics and quality requirements. However, given importance of ethics, independence, and quality, we included key principles into our standard. In this way, we wanted to ensure that independence is safeguarded and quality processes are in place, regardless which engagement standard is followed by an assurance practitioner. Our standard does not require compliance with professional and ethics standard 1, 3, or 4 issued by the XRB. However, our standard does not cancel any requirements that assurance practitioners need to adhere to regarding ethics or independence or quality management, regardless if these requirements are included in the engagement standard applied or if they are required by professional bodies or accreditation schemes that assurance practitioners belong to. So you might ask question, why our approach is so different to any other standard issued by the XRB so far? And now Karen will come and explain it a little bit more.
Thank you, Anna. So I just want to take a bit of time to explain some of the key characteristics of the GHG assurance standard, including the basis on which we compiled the standard and we developed the standard. So firstly, what I wanted to discuss is the temporary nature of the standard. So as you've probably seen, we have deliberately developed this standard to be temporary in nature. And this is really important. So the reason that we've done this is to allow time for the market to develop and for more to be known about the future scope of assurance, as well as any potential licensing regime, and whether the developing international standards will be locally relevant for the New Zealand regime. Over the course of the temporary standard, we will be evaluating the effectiveness of this standard, and we will ensure that the regime has appropriate standards or guidance in place. And as further developments occur, we will be engaging with stakeholders to ensure that we consider a range of views. It was also important that we develop the standard for all competent, independent assurance practitioners. So as many of you on this call will know, providing greenhouse gas assurance is not new. And many organisations have been calculating and reporting GHG emissions for years. And the assurance of these greenhouse gas emissions has been happening in New Zealand, albeit on a voluntary basis. So our new standard is designed to allow all independent and competent assurance practitioners to be able to assure the mandatory disclosures required by legislation. So this means that our standard can be used by those who traditionally have not been using the XRB standards. And we have been very careful through the development of this standard to not create unnecessary barriers for any competent and independent assurance practitioners. And the third basis is that we wanted to encourage curiosity and learning from each other. We are aware that those who provide the assurance now have technical skills and experience. And by allowing practitioners from different backgrounds, we would like to help build capacity in the market, especially when there could be a shortage of auditors. We encourage all practitioners from different backgrounds to be curious and to learn from one another. So you've just heard the main principles of the standard, and we've given you a relatively brief taster of the requirements. If you are interested in hearing more, please join us, and I would encourage you to join us at our deep dive session on the 7th of September. So we've included the registration link on these slides and on our websites. We're also really committed to providing guidance related to our new standard, and you may already have seen a video about the key terms used in the assurance report. We're also working on guidance relating to ethics and independence, and this includes the application of the transitional provision that is included in our standard. We are also working on guidance around the illustrative audit reports. Later this year, we will look at quality management and other areas that we believe will be important to provide guidance on for consistent application of the standard between assurance practitioners. And finally, we are monitoring, and we also encourage you to monitor developments both domestically and internationally. And this includes the results of the MB and MFE consultations that may result in changes of the scope of climate change statements assurance, or may result in the introduction of a licensing regime. On international stages, the International Ethics Standard Board is drafting the changes to the Code of Ethics to include a code specifically for a sustainability assurance. And the International Auditing and Assurance Standards Board has just issued a new sustainability assurance standard for public consultation. And I'll tell you a little bit more about that later in the presentation. But for now, I will hand over to Sharon, who will talk to you more about going concern.
Thanks, Karen. Hi, everyone. So yes, it's my pleasure to talk to you today about proposed revisions to the going concern auditing standard. We're going to take a look at why the standard is changing, what the more significant changes are, and then some of the key messages that we've heard in our outreach so far. So why has the standard changed, or why are there proposed changes to the standard? The going concern standard was last revised in 2016 as part of the auditor reporting suite of changes. At that time, the material uncertainty paragraph and key audit matters were introduced. Fast forward to 2020, the International Audit and Assurance Standards Board undertook a consultation, or they issued a consultation paper which explored the issues and challenges around the expectation gap, specifically related to fraud and going concern, what the users expect versus what the audit delivers. And they are now working within their mandate to try and address some of that expectation gap. So going concern is in the spotlight. We've seen some recent corporate failures or near corporate failures. Recently, there were some bank bailouts in the US. We're dealing with a lot of economic uncertainty, currently a bit of a war going on, and that's creating some disruption, all of which have impacts on business and all on the back of a global pandemic. We're also seeing some jurisdictional standard setting activity with a trend in a number of other jurisdictions towards enhancing the communication about about going concern by both the preparer and the auditor. And in addition to all this, the International Board undertook a post-implementation review of the existing standard and are taking the opportunity to respond to some of the feedback they have received. So we'll move now to look at what some of the more significant changes are. Now, the first one I'm going to talk about is probably the most visible of all the changes, that is changes to the auditor's report. So the proposal is that there will be a going concern or material uncertainty paragraph in all audit reports. That statement will conclude whether the going concern basis of accounting is appropriate and whether a material uncertainty exists. For audits of listed entities in the international space in New Zealand, the requirement will apply to FMC reporting entities considered to have a higher level of public accountability. So for these entities, in addition to concluding on the appropriateness of the going concern basis of accounting and whether or not a material uncertainty exists, if there are events or conditions that may cast doubt on the entity's ability to continue as a going concern, or if a material uncertainty does in fact exist, then the auditor would also be required to describe in the auditor's report how they evaluated management's assessment of going concern. Now, additionally, the exposure draft proposes to clarify the meaning of key terms that are used through the standard. It introduces a definition of material uncertainty, and it clarifies the meaning of may cast significant doubt. Now, both of these terms or phrases are used pervasively through the standard, and having a consistent definition, a consistent understanding of what that means will drive consistent application of the standard. In terms of risk identification, there is a more robust risk identification process. So the proposed standard aligns key concepts and structural elements of the risk assessment auditing standard into the going concern considerations. So the risk identification in the extant standard requires discussion and inquiry. The new requirement will be to design and perform risk assessment procedures as a basis for identifying events or conditions that may cast significant doubt. So we're moving from a discussion and inquiry to a design and perform. And finally, the auditor's evaluation of management's assessment has been strengthened. For all entities or for all audit engagements, the auditor will be required to evaluate management's assessment. There are more rigorous procedures to challenge the assumptions and judgments that underpin management's assessment. And where financial support is necessary to support management's assessment, so that's where financial support from other parties, either third parties or related parties, is required, then the auditor will be required to assess the intent and ability of those other parties to provide that support. So I'll move now to some of the key messages that we have heard in our outreach, and we have worked hard to gather feedback from a variety of stakeholders, and the feedback we've received will inform our submission to the International Board. So what we've heard from users, we've heard that the more information that they have, the better, particularly about material uncertainty, but that the timeliness is an issue. From preparers, we've heard that going concern is their responsibility. It is their responsibility to disclose, as required by the financial reporting standards, when they need to. And they're concerned that there is an appearance that going concern responsibility is being pushed to the auditor, and therefore there will be an increase in the expectation gap. There's also some concern that these changes, proposed changes, will increase the work for preparers at a time where there is already a lot going on. For example, in the climate space and having to report on climate. And from practitioners, we have also heard concerns of widening the expectation gap. There will always be corporate failures, and whether an entity is a going concern is not a guarantee of its future viability. There's also concern about the standard going concern paragraph. So that's the standard wording that the going concern basis of accounting is appropriate and that no material uncertainty exists, and that no material uncertainties have been identified. And there's concern here that a standard paragraph will actually overshadow when the auditor does have something to report. And finally, the auditors or practitioners have been asking for more guidance in relation to the work effort required to assess management's assessment. For example, in a nothing to see here situation where going concern is not an issue, what does the auditor need to do to evaluate management's assessment versus in a close call situation? So that's going concern in a nutshell. I will now hand back to Karen to present to you on the International Exposure Draft on Sustainability Assurance.
Thank you, Sharon. And as Sharon said, we're going to move on to the newest exposure draft that has just been issued for consultation by the International Auditing and Assurance Standards Board, the IAASB. So this new exposure draft is an overarching, what I'd like to say, umbrella standard. It's a principle-based standard, and it's intended to be applied to be used for the assurance over all sustainability information. So that means that this standard is framework neutral. So it is intended to be applied to assure all sustainability frameworks, for example, the assurance of sustainable development goals or integrated reporting or other such frameworks. It's been developed by the IAASB in response to a global and internationally identified need for consistent assurance over sustainability information. And it has been developed to be able to be applied by all independent and competent assurance practitioners that perform sustainability assurance. So it's intended to be professionally agnostic and applied as one standard. Having said all that, what are the main principles of the standard? So this is an assurance standard, so it results in the issuance of an assurance conclusion or opinion. And this assurance opinion will either be limited or reasonable assurance. And there's a lot of information in the standard about the audit procedures that should be performed in both a limited or reasonable assurance engagement. And this includes the work effort that is required to be able to perform a limited or reasonable assurance opinion. The standard details the requirements for ethics. The requirement is that the assurance practitioner must apply the code of ethics issued by the International Ethics Standard Board or a code that is at least as demanding as that code. And this code, the Code of Ethics, is issued in New Zealand as PES1. It also details the requirements for quality management. The assurance practitioner must apply a system of quality management that is at least as rigorous as that published by the International Auditing and Assurance Standards Board. And these quality management standards are issued in New Zealand as PES 3 and 4. And as you would expect, materiality considerations are also included in this new exposure draft. And this includes both quantitative and qualitative materiality considerations, and how they would be intended to be applied for sustainability assurance purposes. There's also detail about the requirements for evidence that is needed to support the assurance conclusion. So as I said earlier, this is now open for consultation by the IAASB, and we've included the link to their consultation on the slide. The IAASB needs their comments by the 1st of December 2023, and we are keen to hear your views. So please provide your comments to us earlier than that so we can use them to inform our submission on the standard. The IAASB is doing some global roundtables, and we at the XRB are currently exploring developing some focus groups to discuss broader sustainability assurance matters. So I will now hand back to Misha, who has some final information about modified audit reports.
Well done, everybody. We've almost made it through an hour on talking through a number of audit and assurance issues. Just before we wrap up, I thought I'd quickly do another reminder. So on the next slide, what we wanted to just remind all audit and assurance practitioners about is that under various legislation, there is a requirement to lodge modified audit reports with the XRB. Now, we've tried to make that as easy as possible. If you log onto our website, really what you need to do is complete a form for each report that's being submitted and then upload the PDF document and hit the submit button. We hope that's easy for you to apply, but really today is just to remind you that there is this legislative requirement to lodge those reports with the XRB. Importantly, under the Incorporated Societies Act, that will be now also required from October 2023, so that's a new one. And I'd also like to flag that under the GHG assurance regime, from next year, so we're looking into 2024, there's also a legal requirement for assurance practitioners to lodge modified assurance reports with the XRB. So this is just a process that we really want to remind you all about and get you into the habit of lodging those reports with us. I did see some hands up going, but I don't think we have the ability to answer a hands raised. If there are any questions, please do drop them in the Q&A or the chat, and we can got a couple of minutes to respond to those if you do have any. See one there. So the question that's been asked is there a recording of this webinar? Yes, absolutely. This webinar is recorded as well as the slides. Both of those will be available on the XRB website following this event. So have a look on the events page and you'll be able to find the recording as well as a copy of the slides. We hope that you have found today's session helpful. Following today, all attendees will also be sent an email with a survey. So I encourage you to complete that and to tell us what you think. I also encourage you to follow us on LinkedIn, sign up to our alerts and our newsletters. And if you do have any other comments or questions about assurance-related matters, please drop us an email at assurance@xrb.govt.nz. So thank you also to the assurance team. I think you've done a great job today. And yep, we'll see you again soon. Mā te wā.